Welcome to the Deep Dive. Today we're unpacking a really interesting set of sources on Melstacorp PLC. It's a major player in Sri Lanka, a big public limited company.
Yeah, a diversified conglomerate.
Exactly. And our mission really is to cut through the usual noise, give you a shortcut to being properly informed about what's, frankly, a pretty complex company. We got their company profile, financials, market data. The works.
And we're digging into how one company manages to operate, across so many different areas.
And how they thrive, or at least navigate, a really dynamic economic scene over there.
And what's quite striking about Melstacorp is this recent financial picture. It's a bit of a paradox.
That's so.
Well, they're huge in Sri Lanka, definitely one of the top listed companies. Assets over, 334 billion Sri Lankan rupees? That was fiscal 23.
Wow.
Yeah, and employing around 21,000 people. It's substantial.
And they have that core philosophy, multiplicity, resilience.
Reliability and longevity. Seems to run through things.
And multiplicity is right.
Yeah.
I mean, look at the sectors. Beverages, plantations, telecom, financial services.
Tourism, logistics, IT, healthcare, power generation. It's a lot.
It really makes you wonder, how do they even manage all that effectively? Is it spread too thin?
That's a great point. And it leads to something pretty critical we found. Despite this massive diversification, their beverages sector still totally dominant.
Really? How much?
51% of group revenue. That's for fiscal year 23-24.
Half the business from just one area, even with all the others.
Exactly. So it highlights this key concentration. While diversification helps generally, spread risk.
Right.
This specific reliance means they can still be quite vulnerable, especially to things like policy changes. Targeted tax hikes hit them hard, for instance.
Okay, I see. And you mentioned impacts. They've definitely seen some ups and downs financially, haven't they?
Well, absolutely. A real roller coaster. Revenue, net profit, big dips during COVID, fiscal 21.
But they bounced back.
They did, strongly. But here's the really compelling twist, financially speaking. In fiscal year 2024, their net profit, it dropped significantly, like 44.63%.
Ouch. Nearly halved.
Yeah. But, and this is the kicker, their market capitalization, the total value investors put on the company,
What happened there?
it increased by a massive 86.31% in just the last year.
Whoa. Wait. Profit down almost 50%? Market value up over 80%?
Yep. Reached 182.38 billion Sri Lankan rupees by August 2025.
That is a paradox. What's your take? What's driving that confidence if the bottom line took a hit?
Well, it strongly suggests investors are looking past the short-term dip.
Yep.
They seem to be pricing in future recovery and also big strategic moves.
Like the Heineken Lanka deal?
Exactly. That acquisition seems key. Plus, you have to look at their balance sheet. It's actually gotten much healthier.
How so?
Their debt-to-equity ratio, basically how much debt they use versus their own funds, it improved dramatically. Went from 76% in fiscal 22 down to just 38.5% in the latest quarter.
That's a huge improvement in financial structure.
It is. And that strength really underpins their consistent credit rating. They've got that AAA Kolka from Fitch.
Top tier. Signals real stability.
Right.
And that kind of shift, better finances, renewed investor confidence, often ties into leadership changes, doesn't it?
Absolutely. Seeing that here. There's been a pretty significant generational shift.
Wow.
The founder's son, Hasitha Jawardena, he's now the executive chairman.
Okay. New generation taking the helm.
And they also appointed a new managing director, Mans Pereira. He brings a lot of international experience, financial strategy, restructuring, M&A.
Sounds like they're gearing up for something, a new direction.
Seems that way. The new strategic focus is clearly on innovation, digital transformation, and continuing to optimize that big portfolio.
Okay. Lots of positive signals then. But you also found something maybe less positive about their returns.
Yes, and this is an important point, I think. Despite all the diversification, their return on equity, the ROE,
which measures profit generated from shareholders' money, right?
Exactly. Their ROE over the last 12 months is 11.2%.
Okay. Is that good or bad?
Well, compared to the broader beverage industry average, which is around 27.6%, it's considerably lower.
So less bang for the buck compared to more focused beverage companies.
Potentially. It does raise that question. Does diversification, while it definitely helps manage risk, maybe sometimes dilute returns compared to competitors who stay really focused?
That's a classic conglomerate dilemma, isn't it? Stability versus potentially higher focused returns.
It is, and you can't ignore the operating environment risks either.
Like what?
Well, ongoing legal issues, tax disputes, there was that Pelwat Sugar Industries case. They lost control, had to impair the investment. It shows the real-world challenges in Sri Lanka.
Right. Not always smooth sailing.
Definitely not. But on the flip side, there are clear opportunities, too. They're pushing into high-growth areas.
Such as
Healthcare expansion is a big one, Melsta hospitals and labs, and also moving into renewable energy development.
interesting. Diversifying into new growth engines.
Seems to be the strategy.
So wrapping this up, what's the key takeaway for you, our listeners? Melstacorp's story. It's really a case study, isn't it?
It really is a diversified giant balancing, stability against strategic growth, all while navigating a pretty complex, sometimes tricky economic landscape.
They've shown resilience, bounced back from hits.
And made clear strategic shifts with new leadership, targeting new sectors. It makes them a fascinating example of how corporates evolve, especially in emerging markets.
It definitely leaves you with a provocative thought, doesn't it? In today's volatile world, is that kind of broad diversification, even if it means maybe giving up some immediate efficiency or higher returns in one area, is that the ultimate long game? The best strategy for long-term survival and eventually value creation?
That's certainly something to ponder as you continue your own deep dives into the world of business.